Hey, what's up guys? It's Jermaine here, hope you're keeping really well and welcome back to Avoiding Broke. So guys, it's become more and more clear why we need to go back and share with you all the ins and outs and ideas and formulas that me and Leanne rely upon to run our everyday portfolio. And you know, these ideas are ideas that have been hard fought through research, through speaking with people, through mentorship and sheer hard work and sometimes dumb luck. And today, I want to share with you my initial thoughts around how you can get started in investing in property or real estate. So, if you're ready to jump in, let's go. So guys, when you're starting out thinking about becoming a real estate investor, for me, one of the important reasons is to be as clear as you can about why you would even consider it in the first place. So when I look at this kind of house, and hopefully it's a nicer house than the one that I'm currently drawing here, some of the really important benefits that this house gives me are cash flow, the ability to make money on a regular basis from a particular asset. You're buying land, so it's physical. It's something that you can't fake. You can't recreate it out of nothing. It's there and it's tangible. You're buying appreciation. You're buying something that typically goes up in value. And if you believe in the concept of housing cycles and property cycles, then you know that value can go up quite significantly. You're also buying something that has different tax benefits. And it's for you to look at the jurisdictions that you reside in, but hugely beneficial tax opportunities as a property investor. And you're also buying, these are some of the reasons I love real estate, you're buying an element of future-proofing. Because when you look at your investments over time, there can be any number of companies that you're not sure if they're going to exist. There can be any number of products if you're not sure that if they're still going to be offered. But one thing that's highly likely is that a very appealing piece of property will continue to exist, will still be sought after, and will continue to generate interest that offers you some kind of economic value. So this is why. And there's a very famous suggestion from Andrew Carnegie that 90% of property, 90% of millionaires achieve that status via property. So then when we think about how do you actually really get started, like what are the building blocks? If you're sitting there right now and you've got ambition and work ethic, but you haven't actually got certainty over what to do, I'm going to give you the way that I think about property and the way that I continue to think about property to this day. So the first thing to do is research. Property research is absolutely fundamental. When you are going through and you are researching, this is the chance that you're taking to actually really get under the hood of why you would ever go and take an asset on in the first place. And the research you're doing includes locations, it includes the type of property, right? It includes market trends. It includes the macro economy. It includes physical visits, so actually going to the places you're looking at. Just a few examples of the type of work that you do when you're conducting property research, and which is absolutely critical for you to start understanding where you might choose to make your investment. So everything's got to be grounded in research. Okay. And guys, as we go through, what I would encourage is just make sure you stop the video in different places. Make sure you're taking some notes, have a pen and paper available, because you absolutely want to be going back over this content and making sure everything is landing for you. Okay? So step number one, we'll write them up here. Make sure I don't forget them. Is your research. Step number 2 for me is I need to get after my earnings. And when I say earnings, there are some very important things to remember whenever you may become a property investor. So let's just say, for example, you've got a job and in your job you earn £100 or $100. If you are just thinking about everyday spend in a supermarket, £100 or $100 only goes that far. So if you're buying a burger, you have to excuse my dodgy looking burger. $100 on burgers literally equals $100 worth of food. Property is a different beast altogether. If you're going to buy a house, $100 spent on a house can be leveraged up with a mortgage to equate to maybe a $400 piece of land. And in some jurisdictions, you actually need to put down less money than 25%, but you get a multiplying factor, here it's times 4, whenever you invest that money in a property. And this is one of the reasons I love that real estate, because you show me where else you can go and spend 1 and get 4. I don't know where else. And this is one of the reasons I love it. So when I'm looking at this, I'm always thinking about taking myself, imagine this is me, Jermaine, I'm a lot bigger than this. I take myself off on the road to work or to earnings, and I'm just trying to get as many of those dollar bills as possible. And that means if I need to go on my job, if I need to go on eBay, if I need to go and take a second job, it doesn't matter. Because once you're getting all of those monies coming in, all of that money is going to get pumped right back into this beautiful equation. And if I managed from all of this activity to go and somehow get 1,000, I know that that 1,000 through the magic of leverage is going to give me 4,000 to play with. And see, even when you're investing in the stock market, if you spend 1,000, you've got 1,000's worth of your particular asset. Whereas here, my 1,000 is going to be leveraged up. Amazing. So we love to look after the earnings. And these are the kind of numbers and thinking that you need to really get into your head when you're becoming a property investor, because you have to look at your money and your assets in a very different way. Okay? So once I do my research, and research is an ongoing thing. Earnings is an ongoing thing. Once I start to do that, I then need to be thinking about storing my money. I need to be banking it. But guys, when I talk about banking money, I'm not talking about banking in the traditional sense. What I mean is, as you go through your journey to becoming a property investor, you are going to be collecting different amounts of money. You're going to have a big old bag of money. And what you want to continue to do is not rush anything at all. You want to, as much as you can and as much as you need to, you want to keep adding money into this big old bag. And you're waiting until your research shows you an opportunity. This is the key thing, guys. When you're a property investor, you're not just trying to run into any old deal and just get your money into anything. You are waiting for opportunities, and it's a very important mindset to have. You need to be doing your research. You need to be charging your earning. You need to be banking all of those different little bits of income, all of those little drips. You need to be banking them. And then the point at which your research and your money marry up, this is the point of opportunity. That's where X marks the spot. Crucial to remember. You do your research, you understand your earnings. The two things you've got to do with your earnings is you need to charge it. You need to get it going up as high as you can, and you need to understand the opportunity for yourself, which is leverage. Beautiful leverage. Our 4x multiplier. Let me put in here 4x. You then need to be banking, and whilst you're doing all of that, you're continuing with your research. You're looking for the opportunities, and you're thinking increasingly, where can I go and jump in on a beautiful piece of property that I feel confident is going to give me the right returns, the right potential, the right cash flow. And that's what we're doing, guys. That's where you start banking. That's where X marks the spot. Okay. So what comes after that amazing point of research, of earnings and banking? Well, guys, what comes next is execution. And man, this is the fun bit. Execution. When you're in execution mode, this is the point where you are getting ready to drop that money on something that you believe is going to make you a superstar in the real estate world. And I'm telling you, it's so much fun because this is where you're in the hunt. You're putting in the bids, you're talking to the agents, you're looking at renovations, and you are getting engaged in this marketplace. You've got your shortlist. You've maybe seen 50 properties, 100 properties, and you've come across something. Seller, distressed. You're thinking to yourself, the property down the road sold for 120,000. You're getting it offered at 80,000. You're pricing in 10k renovations, but hang on a minute. Even with 10k and with your fees, let's assume you spend 100k, but you think you can sell for 120. Beautiful, straight away, bang, you bang 20k equity. Execution mode, this is where you get busy. And when you're in that amazing execution mode, you are looking to be making the bids. You are talking to people. Right? Your talking includes agents. You might be talking to workmen. Right? You're lining up the deal. It's a super exciting time. It's probably my favorite time because this is where you're getting the taste. You're in the hunt. And this is where you're just about to go ready to snag that fantastic bit of real estate. And you're about ready to see your net worth just increase. I love it. So number 4, guys, is execution. And I want you to think really carefully about execution. Because when you're in execution mode, the things that you can do as a beginner is you want to start understanding how to go and talk to different agents. You want to start understanding what is the price of certain renovations, like what is the cost of refitting a bathroom or doing a new kitchen. You want to start building that knowledge base for yourself because that's how you're going to get the tools that you need in the execution phase. And step number 5, guys, the last thing is learn. What does learn mean? Learn means, let me make sure I spell that correctly. Learn means that once you've gone through all of the research and you're getting used to doing it, once you've understood how to think about your earnings in a different way, so you realize leverage can be your friend and you understand how to generate 4x types of investments. And once you've gone through and you've learned how to bank that money, you've learned the discipline that is needed to look at the long game. Once you go through and you execute, then the beautiful thing is you need to capture that learning. You've got to sit yourself down and you've got to not just run to the next deal, but you've got to learn. It's so important that we consolidate our knowledge because that is how we become better investors over time. Every time Leanne and I are in the deal, we are learning. And every time we have had an experience, we sit down, we take a drink, and we actually say, okay, what have we taken from that? What would we do differently going forward? How are we going to use this experience to really start nurturing us and making us become more sophisticated investors? Guys, I'm telling you, if you put all of this together, if you really start committing to the research, the earning understanding, the discipline of banking, the execution, the skill, the nous and the behavior and the way of managing yourself, and you commit to the learning, you are going to be building fantastic fundamentals to become property investors. And for anyone who is paying attention to what all of the words stand for, look at this one. Rebel. There it is, guys. A nice, quick and easy way of remembering what it is we're talking about here and what it is we're trying to communicate and how you can help yourself in the future. Learn to rebel. Learn not to do the conventional investing. Learn not to just to follow everything that you kind of hear out on the streets. Learn how to come up with different ideas for yourself. Learn the game of real estate. Understand why it's so powerful as a wealth builder and a wealth creator. Understand why Carnegie is saying that 90% of millionaires generate their wealth from property and from real estate. Understand why when you talk to a sophisticated investor, we are researching constantly because we understand that our knowledge of the marketplace and what's happening is what helps us generate the best ideas and the best opportunities. We understand that earnings and the earning multiplier that real estate offers us is a super powerful way of us increasing our scope, increasing our influence, and we love that multiplier. Absolutely love it. We have worked very hard to shape very good disciplines about banking money, because it's very tempting sometimes to just dip in here, dip in there, you've got to do this, that and the other. Real estate investors don't do that. We've got money committed to the deals and we don't trouble it because that's what we need in order to make sure we can fund the opportunities when they come about. Then when you come to execution mode, if you're dealing with a seasoned investor, they're going to be so focused. They're going to operate in such a clinical way, have such an awareness of the different players, the different stakeholders, are going to manage everybody with great respect and commitment, but crucial eye on the prize, laser focused execution. Because we know, guys, time is money and we've got to be efficient in the deal and we've got to make sure that we're getting the most out of the opportunity. And I'm telling you, we're always learning. Reading, speaking to people, reflecting and consolidating. Because we want to get better and better and better. And we all have a start point, but the beauty is when we can grow from that next point. We grow continuously. And guys, we rebel. And that's what I'm trying to bring to you. If you're starting out on your journey as a real estate investor, go through this video a few times. Think about what I'm saying here. If you've got any questions, and I really do mean any questions, you put them below and I'm going to come back to every single one of them. Go on this journey, because if you want to get started in real estate and if you want to get started in the kind of investing in nice, solid, physical assets with incredible appreciation potential, incredible cash flow potential, in something that you can't recreate, which is land. If you want to get started, follow this Rebel formula, and this is going to give you a fantastic grounding to help you on your journey. And if you've got any questions, including how to go into more detail and other people I recommend you might want to go and tune into and listen to and things to read, just leave them in the comments below, guys. I've got your back. Take care, guys. Hope you loved this one. Smash the like, smash the subscribe, and please leave a comment to let us know how you're finding this content and anything you want to know more about. Loving it so far, guys. Have an awesome, awesome, awesome week ahead. Bye-bye.